You look like you want to know more about appealing IRMA. Let's see if we can help you out. So what is IRMA? It's a premium surcharge that affects about 5% of Medicare beneficiaries. In particular, it affects those whose MAGI, their modified adjusted gross income, which is pretty much their adjusted gross income plus tax-exempt interest. When that MAGI exceeds certain thresholds, IRMA gets applied. For this purpose, MAGI is calculated using tax information from 2 years prior, which creates a bit of a timing problem if someone's financial situation changes dramatically. The nuts and bolts of it are this. Medicare uses that 2-year look back for their IRMA calculations. So for example, if someone's 2024 tax return shows high income, they'll pay an IRMA surcharge in 2026, even if their income dropped significantly in 2025. This premium surcharge applies to both Medicare Part B and Part D, and the additional cost can range from roughly 40% above standard premiums to over 200% above standard premiums for the highest income brackets. For many retirees, these surcharges represent a significant unexpected expense that continues month after month unless it's corrected. So how do we correct that? We appeal it. The Social Security Administration recognizes 8 specific life-changing events that could qualify you for an IRMA appeal. These fall into 3 broad categories: income reduction, family status changes, and settlement payments. The first set income reduction events include things like a work stoppage, where an employee either retires fully or suffers complete job loss. There could be a work reduction where hours or salary are reduced. A loss of income producing property could be grounds for an appeal. So when someone suffers a loss of real estate or other property due to arson, disaster, fraud, or theft, we should note, though, that the sale of the property itself would not make you eligible for an appeal here. Loss of pension income could be grounds for an appeal. So if someone lost their pension payments or the plan was reorganized to otherwise stop those pension payments from happening, could be grounds for an appeal. The second set of reasons here are family status changes. So if there's a marriage and someone enters a legal marriage and that impacts their income here, that could be grounds for an appeal. Divorce or annulment. So if the legal marriage ends and a joint return won't be filed, that can be grounds for an appeal. If their spouse dies and their income is removed from calculations, that is certainly grounds for an appeal here. And the last grounds for appeal here is an employer settlement payment. So where someone receives a one-time payment, either due to bankruptcy or reorganization, that artificially inflates the previous year's income. The key insight here, though, is that these events must have occurred after the tax year used for the current IRMA calculation and must have resulted in a significant reduction in the MAGI of the person who's making the appeal. If any of those 8 criteria apply, then it's time to consider the appeal. There are 4 big steps to that appeal process. First thing we'll need to do is gather documentation. So we need to collect evidence of the life-changing event and its income impact. So that could include things like retirement letters or final pay stubs, a divorce decree or death certificate, medical records, especially important for disability-related work stoppages. For those real estate losses, we would need an insurance adjuster's statement of loss, pension termination letter in that case, and we need to show income impact, so we need a copy of a tax return or an estimate of MAGI going forward as well. Second step is to complete Form SSA 44. Its more formal name is the Medicare Income Related Monthly Adjustment Amount Life-Changing Event Form. That's the official appeal document. The form requires specific information about the life-changing event and current income projections. Step 3 is to submit the supporting evidence. So we're going to gather everything we gathered from step 1, gather up the form from step 2, and we want to make sure it all corroborates with each other, and then submit it to Social Security, either online or at the local Social Security office. Social Security will need to verify that the event happened and understand how it affects the person making the appeal's financial situation. The last step here, step 4, is follow-up. We'll want to take a look at whether or not the appeal is successful. These appeals typically take 30 to 90 days to process. If they're approved, IRMA adjustments may be retroactive to the date of the event, often resulting in refunds for overpaid premiums. Now, before we go filing that appeal, there's a few common mistakes we need to avoid here. The first one is that we should never delay Medicare enrollment unless we have a justifiable reason to do so otherwise. Some folks mistakenly think they can avoid IRMA by delaying their Part B and or Part D enrollment. That typically creates exposure to late enrollment penalties that are probably more costly long-term than what could be a temporary IRMAA surcharge. We also shouldn't assume automatic adjustments. Social Security doesn't automatically adjust IRMAA when life changes occur. This appeals process is required even for obvious situations like retirement, the death of a spouse, or divorce. And also, don't appeal frivolous cases. Appeals should always be based on genuine significant income reductions. Minor decreases or temporary fluctuations typically won't qualify for IRMAA relief, and we'll have spent more time doing the appeal and hoping for relief than we will have actually gotten relief. Thanks for watching. For more information, keep reading down below.